Hey there, and good morning, everyone. This is Trader Tim from EminiMind, and I'm doing a Monday market analysis video. It's actually the morning of November 11th, 2021, and this week is a big week because we have the Fed meeting announcement here on Wednesday, and we should have some more clarity on what they're going to do with bond tapering and going into next year, how they're going to maybe timeline, what the timeline is going to look like for that. And that could really have a big effect on the future of interest rates, but then also the way the market moves now in anticipation of what might happen or what's likely to happen with their tapering next year. So should be some fireworks this week. I do intend at the close today to put on a put position in the SPY. So I'll just come over here if we're trading about where we are now. The 459s would be fine to buy, and at this point, if you wanted to split it up and do even some for this Friday, which are going to be dirt cheap because the catalyst is the Wednesday meeting announcement. You could buy some for this Friday's expiration as well as going out, the 12th or the 19th on the weeklies there. Or the 19th would be the monthly expiration, third Friday. So that's my plan for hedging this week. I'm not going to be trading tomorrow and Wednesday as I typically do not. The Tuesday prior and Wednesday of the Fed meeting announcement. So that means this week's live trading session will be on Thursday. So if you're going to tune in Thursday morning. Tend to have a lot better opportunities the Thursday after the Fed meeting announcement than the Tuesday and the Wednesday of the announcement while they're meeting. The first thing I wanted to touch on today, and we'll try to keep today's video a little shorter. The first thing I wanted to touch on the daily chart is that in the last couple of weeks, we really have not had, we do have one unfilled gap that I don't have drawn up here, right here. And it's a healthy sign when we don't have a lot of unfilled gaps because that means there's a lot of trading back into the prior day's range and more importantly, trading across the prior day's close. So these unfilled gaps down here mean that price has traded or we closed down. This guy's got to be a little bit lower, right there. We traded at this price, and then the next day, the trading hours session, we opened in this case above it, and we never went back down to that price level. So those unfilled gaps tend to fill at some point, usually in the near future, but sometimes when we get further away, they kind of linger back there, and then when we get that bigger correction, that's when we start knocking all of these off. So we don't have a lot of unfilled gaps up here. We've had a pretty strong run in the last 2 weeks or so, and then going back all the way to the beginning of October, really, where we started the uptrend. But tech has seen a big surge, had a big surge in Tesla, and so things are strong at the moment, but I think Wednesday will be a big shift or at least a signaling towards what the rest of the year and going into next year might look like. So if you go back to the last time the Fed did a taper, that would have been 2013. We're likely to see a rise in interest rates for the Fed to try and slow down inflation, and that should mean a little bit slower slowdown in some of the economy. However, there's already all of this supply chain shortages, everything from the bike industry to car chips and all that. So things are already hard to come by, and that's sort of stifling the spending component. But one interesting thing is if you go to, let's go way out here to a 10-year chart. If we go back to 2013, when the last kind of quantitative easing occurred, there really wasn't a big slowdown immediately in the stock market. And so while every instance is different, history does tend to repeat itself. And going into 15 and 16, we had more of a sideways back here, sideways year in 15 and 16. But right around the quantitative easing in 2013, the market did continue up. And then if you go further out, we had this widening formation in 18, 19, and then the dip in last year in 2020, and then ripping up from there. So if things flatten out, that wouldn't necessarily mean recession. And if things pull back a little bit, that also wouldn't necessarily mean recession. So I don't think we need to be overly fearful of, wow, things are so good today, and on Thursday they're going to be, absolutely the opposite of what they are today, and we're, going to be just in the dumps. But as far as trading is concerned and how we can act on some of this bigger, economic, more fundamental data, we should be able to expect more volatility. And so from an intraday perspective, that's a really good sign. For those that have been trading for a couple of years, in 2020, before the COVID stuff, volatility was really, really low. And the moves were smaller than we have seen in the last year. And so it is a nice treat to have this increased volatility. And in the last couple of weeks, we've now dropped our volatility and have these smaller ranges. As far as kind of a plan for this week, Tuesday, Wednesday, like I said, I won't be doing any trading. And then Thursday, I'll come back in, see what happens on a potential gap on Thursday. And if we can start up some day trades again, we will. One thing I wanted to point out from this morning is we had a low tick at lows on the ES here at both was like 649 and 640. If I go back, 650. Yeah, so 49, and then so right here at 650, and then we made a lower low. So we had a low tick that lined up with lows. We did get a bounce here, but then we rolled over and made a new low. And anytime it's early in the day like that, and you have a low tick that lines up with lows, and you have a sign that we might be moving up, and that could be the low of the day, but then 5 minutes later, or sometimes less, we roll over. You don't necessarily want to be trying to pick bottoms the rest of the day. Now, with the context of this week, sometimes Monday, Tuesday here before the Fed meeting announcement, you can kind of expect things to be a little flatter. But as we come into this middle part of the day here, we're sort of sitting right at the halfway back short for the day. So I wouldn't be surprised if we get some rollover and a little bit more selling. But I'm going to wait till the close to put on my put hedge. A lot of times even if we do sell off later in the day here, we'll get a bounce a little bit into the close. And so rather than, get stuck putting on a position down at lows, I'd rather wait till closer to the close to put on that position. So anytime you get a low tick at lows that does not get follow through in the other direction, like low tick at lows and we didn't get that bounce to the upside, we did not make it to the halfway back short at that point, which would have been up here. We bounced briefly and then rolled over. That's a sign of more weakness versus strength. And if we look to the breadth and advanced decline line, it's actually giving a little bit conflicting signal, whereas we're at 3.6 to 1 and 1300 on the AD line. Those are relatively strong numbers. So when you look at some of the smaller bits and pieces like the low ticks at lows, the breadth, the advanced decline line, you're kind of already starting to see some mixed signals, and that's a lot of what you tend to get on these Fed meeting announcement weeks. And so that kind of ties back into why I, take the Fed morning off on that Wednesday, and this week I'm going to take tomorrow off too, just to have a little bit of a extended weekend break here. So should be a lot of good trading to come. We're beginning of November. We've got all the way from now till Thanksgiving, which would be the next kind of holiday break, and then a couple more weeks before the Christmas holiday. So I get some questions on like, well, how can I be more patient with my trades and not rush into things? And I think kind of setting up your week, or at least blocks of your week where you know, okay, I'm going to have a Fed meeting announcement coming up. That just kind of chill a couple days leading into it. Put on a put hedge so just in case things go south, I can make some money there. But then I'm going to get ready to attack things on Thursday if things get good, and then we've got another couple of weeks here where we can hit things really hard going into Thanksgiving. If you just kind of come into every single day looking for opportunities, sometimes you get stuck trading heavy on the choppy days and you get kind of burnt out. And so this way, structuring these little breaks in there, at least for me, is I have to do that because I can't just go, trade every single day of the year all day long. So I hope everyone has a great week. And remember, Thursday we'll be doing the live trading session, not tomorrow. And if you have questions, drop them in the comments below. Thanks. We'll talk soon.